Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're discussing a significant shift in the Canadian mortgage landscape that many are calling a game changer for prospective homebuyers. As announced by Deputy Prime Minister Chrystia Freeland, the federal government is implementing changes that will expand the availability of 30-year amortizations and increase the insured mortgage cap from $1 million to $1.5 million. These changes officially take effect today, December 15th. This hike in the insured mortgage cap is particularly noteworthy as it lowers the barrier to entry in some of Canada's most expensive housing markets. Real estate experts, like Elliot Chun from the Partners Real Estate in Vancouver, have expressed optimism, suggesting that this move could significantly impact buyers who previously found it challenging to save the required down payment for homes priced over $1 million. The new rules allow Canadians to put less money down on a home priced up to $1.5 million, which could make it easier for buyers in high-priced markets such as Toronto and Vancouver. For instance, under the new rules, the minimum down payment for a $1.5 million home decreases from $300,000 to $125,000, significantly reducing the initial savings barrier. Realtor Elliot Chun highlights that this change is a huge difference maker in the marketplace, potentially unlocking opportunities for young families and couples who are just starting out. With the higher cap, buyers may access larger homes or more desirable neighborhoods which were previously out of reach. Phil Soper, CEO of Royal LePage, notes that these changes are some of the most material in recent times and could add momentum to the real estate market's recovery. Cities like Victoria and Milton, Ontario, where home prices often hover between $1 million and $1.5 million, may see increased activity as a result of these regulatory shifts. However, it's important to consider the broader implications. The mortgage changes align with recent interest rate cuts by the Bank of Canada, potentially making it easier for more Canadians to qualify for mortgages. While this could drive prices higher in certain categories, it also risks increasing competition among buyers, which could further elevate home prices. Victor Tran, a real estate and mortgage expert at Rates.ca, cautions that while the changes are exciting, the income levels required to qualify for mortgages above $1 million remain a significant hurdle for many Canadians. He advises buyers to do thorough mortgage math and understand that while insured mortgage rates might initially seem lower, the overall costs, including insurance premiums, could be higher in the long run. Now, let's turn our attention to the new mortgage rules taking effect tomorrow, which are poised to impact the housing market significantly. As reported by Steve Hubel, these rules are part of a series of initiatives aimed at addressing housing affordability and easing financial pressures on homebuyers. The measures include expanded 30-year amortizations and an increase in the mortgage insurance cap, opening up more opportunities for first-time buyers in Canada's high-priced markets. The federal government has been proactive in rolling out these changes, which are among the boldest reforms in decades. By increasing the insured mortgage limit to $1.5 million, buyers in cities like Toronto and Vancouver can now qualify for high loan-to-value mortgage insurance with a smaller down payment. The rules for down payments remain 5% on the first $500,000 of the purchase price and 10% on the portion between $500,000 and $1.5 million. Additionally, the eligibility for 30-year amortization periods has been expanded to include first-time homebuyers and purchasers of new builds, provided the loan-to-value ratio is 80% or higher. This change is particularly beneficial for those who have not owned a home in the last 4 years or have experienced a breakdown in a marriage or common law relationship. It's important to note that these reforms build on a range of existing programs designed to help first-time buyers. For instance, The First Home Savings Account allows Canadians to save up to $8,000 per year, with a lifetime limit of $40,000 toward their first home. Contributions and investment income are tax-deductible, and withdrawals for a home purchase are tax-free. However, economists like Benjamin Tal from the Canadian Imperial Bank of Commerce suggest that more housing-related measures could be unveiled soon. According to Tal, the Liberal government is under pressure to address the housing crisis, especially with the Conservative Party gaining traction on this issue. He hints that additional moves might be announced during Finance Minister Chrystia Freeland's fall economic update. As we look at these changes, it's clear they could provide a boost to home sales and prices next year. TD Economics predicts that extended amortizations and the increased insured mortgage cap could lead to higher demand in higher-priced markets. However, some caution that the high household income required to qualify for these loans might limit the benefits to a small percentage of buyers. In conclusion, while these measures offer potential relief and opportunities, it's crucial for buyers to weigh the implications carefully. The housing market is complex, and while government initiatives aim to provide support, they may also introduce new challenges. Stay informed and consider seeking advice from mortgage professionals to navigate these changes effectively. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder: Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.